Hello, good morning, good evening, good afternoon, wherever or whenever you happen to be. Thank you for watching the Silver Log, and today it's the Silver Inflation Adjusted Chart. This is going back for many, many years, decades, and centuries ago. And silver, it's been stated to be very suppressed. Thus, we made the all-time low back just a few years ago at roughly $10 an ounce of today's currency, at least for a yearly average close. It is that of $10 per ounce. This data is unofficial. This is from eyeballing what the price looked like over the last so many years and centuries using the 650-year inflation adjusted chart. This chart states the high was 800 and change, which I don't have it at that because that was, I think, $1997, and there's been inflation since then. Thus, it is I got it at around 1160, 1200 as the high from the 1400s. Also, this high in here is from a yearly average close of around like 20 something, and the high was 50. So we're talking about up here as where it really was when it got up there in 1980, if you're looking for a top. And thus, we've had a big, big move. Now, what's interesting is I was watching a video by Mike Maloney. If you're not familiar with who Mike Maloney is, I suggest do a Google or YouTube search for him to find out more. He's been educating people within precious metals. But what he was stating was that you come up to a level where you go from a really low to a really high period. Oftentimes, you can break the previous low and within, of course, high volatility. Now, does that mean we can break this high again and get above here? It's possible. I'm not saying that it will, and I don't know for sure at all, but I think the best way for me to perceive it is that A, it's possible. B, if the trend is going to be making the pattern of lower lows and higher highs, then I would expect this high to be beaten on a yearly average basis and maybe even on an intraday basis of somewhere up towards this level. There is a 100 period moving average on the screen, and this is basically a century, which was obviously bullish. It pretty much most likely traded something in like or was moving something in that area there. It really is best to understand trend. And when it started to roll over resistance, it went in a nice downtrend, and then finally, when it corrected through time, it went sideways. And that's what happens. Markets correct either through price or through time. And thus, when you have a down move and it goes sideways, there's the indicator on the 100 period going flat, having the chart trade above and below it, and then ultimately having a nice move below and then a big resistance push down. Not much resistance here, a little bit, but this one was really big, especially when you consider that it got above there. Really tells you the manipulation that was involved within it. And when you look at that manipulation, you can state, well, some people have told me before that technicals don't work because of manipulation. Okay, so if that means that you're trying to buy in here and you lose, well, then you didn't understand what was going on and then it ended up costing you. But you can look at this chart and state the reason why it went down was because of that of manipulation. Now, where would fair price be within this chart? We were never below this like 145 mark from the 14th, 15th, 17th century and so on. Is fair value very was fair value in here? Was it overcharged the entire run? I don't know. I think it's fair to say that it was definitely undervalued here. Then even in here, it's fairly safe to say that was an undervalued area. So determining what the fair value happens to be, that is by far a very difficult job. The significant trend line that I think was very important back within the time frame would have been maybe something in this area in here. Obviously, with the top one, which I think is the more important one. When it managed to get above it, it found support within here, and it's managed to twice go below it, to keeping the downtrend alive. There's no way right now I can put any significant uptrend at all. At least one that we're not currently within the trend. You have this subtrend. Maybe this will be the trend. That's the only one I can think of doing for a long-term time frame. Is this trend line, which is active, but we're not actively within it. It's active because we can get above it and then trade above it, but we got a little ways to go. for that to happen. So we're in the downtrend. This moving average needs to flatten out, start to go higher. Because this is a yearly average chart and a 100-year moving average, you're talking about moving into 2030, 2040. So for the future generations, is this the bottom? We don't know that yet, but right now, the message of the market is stating this low is only a little bit lower than here. And the Fibonacci, if you're looking for something like that, you got 60, and I think once right in roughly in here. This would be the significant Fibonacci levels from this high to the low that we just established in here. Therefore, it's still bearish below this line. But when you get into markets, you want to buy low and not and sell high, basically. So when you're into a market, say this market does roll over and starts to move to the upside, and you're now within the neutral state, then you're in the positive state. This is not usually where you want to be buying, other than for quick trades and just small portions, basically. The secret is buying low, which is why myself, I've been realizing getting into silver starting as low as 18 back in '08 on the way down, on the way up has been uh, a great time. It still looks to be that of a great time when you look at the fundamentals of people understanding what's going on. The information is available, and I don't think it can be taken away. They can shut down so many of these video sites if they chose to, but they haven't, and there's too many people with copies of the stuff going on. How money is created, the information was never out there before, and it is now. So we'll just have to wait and see. Now, as far as volatility is concerned, if you look at the size of these moves, volatility has really started to take a large increase. And here you had a big move, and I think the volatility really kicked off in here. A big move up, big move down, and we're still seeing it. If we I've been doing some volatility indexes for the short term on silver and even the intermediate term. And this is about as long term volatility that I can find. How this is calculated is taking the yearly average close from a year over year and how much it was. The negative values have been adjusted to match up for equal positive values. What that means is 50% down gets translated to 100% up. Therefore, within this volatility index, it's before was never really above really high. It wasn't really high at all. You had big volatility here, roughly around 1875-ish or so. There was some big volatility here, and it was just starting to go up again. And the way things are going, this is 2011 average over the 2010. Right now, I have it set at the current price of 39. Last year's average was a little over 20, so it's already got about close to 100% gain on there. It's about 22, I think. But when we look at this trend for volatility, it was in this really tight consolidation range, and interestingly enough, it makes this new low here in that 1850 time frame and has just been going up really, really high. Now, here's the thing. This is calculated by taking the average of the 30 and the 120-day moving average of the chart above. And the 30 now is eliminated 1980. And we're already eliminating 1981. So that's why we've had this major decrease within the gap lower. But we're seeing that we have a lot of volatility. Most likely, if you look at this as a chart that you buy, which is pretty easy to trade, would be that you buy now because it's looking to go higher on this type of move with the increase in volatility that has occurred. The fact that we've eliminated some big dates, the 1980 and 1981 time frame, and we're still at a high level, would mean that my voice is going, so I'm just going to end this soon. But it does seem to me as if it's going to probably go much higher from here on in. As it's like any chart, you have a uprise, downrise, uprise, downrise, and that'll be it, folks. Bye bye. Take care.